Highlands, Mike FM. That's Sting and the Police there. My name is Morning Dave. Appreciate you being with here all these years. It's 79 degrees in Sebring, sunshine, and we're at 8:42.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Yeah, let's double check and see what's going on. I got a sneaking hunch debt advisors might be in order for the government right now. Find out what's going on your money. Philip Statler from Statler Financial Services with us this morning. Philip, good morning. How are you?
Hey, good morning, Dave. Hey, we had a great day yesterday, but I got to tell you, we talked about the treasuries right as we were getting off the air yesterday, and kind of flipped around, and that is definitely affecting the markets this morning. You want to kind of tell them what yesterday looked like anyway?
Yeah, let's give him the good news before we give him the bad news, because we have trouble finding any good news in the current events. After Treasury Secretary Bissett announced that they were going to end up doubling the federal government's purchase of its own long-term bonds, so that made everybody happy, saying, oh gosh, they noticed. And yesterday the Dow was up by about 120 points. That's 0.2%. S&P about the same percentage, up 16. NASDAQ was up by 41. The Russell 2000 was the biggest gainer of the bunch. They were up a full 0.5% yesterday. And then all of a sudden the bond market weighed into the announcement that they were going to do that. Rates just kept going up, and then we announced that the federal debt has crossed $40 trillion, and the bloom just fell off that rose like dead petals, didn't it?
It did, Dave. I got to tell you, it has tanking this morning significantly, I would say, at this point.
And I think it really was the psychological side of that thing. Yeah, the bond market is a bellwether that really gives you a better picture of the mood than even the stock indexes. But at the same time, there's a psychological barrier on that, just like those even thousand numbers on the Dow and the S&P and whatnot. And when the announcement came out that our federal debt had crossed $40 trillion for the first time, just everybody looked at that and went, oh, crap, and headed for the Pepto-Bismol, didn't they?
They did, Dave. They did, and that's a huge number to cross over, and nobody likes to think about that, but it is affecting every one of us when it comes to interest rates, when it comes to taxes. I mean, all these things. At some point, we've got to start reducing that thing, and that's going to be a hard pill to swallow.
Yeah, we're kind of way past the point where we can do the math, divide by 300 million, and each one of us can ante up something. I don't want to think about what my share of that would be, would you?
No, not at this point.
Not one tiny little bit. And what ended up happening is when that hit, the overnight futures, after that announcement hit, pretty much said, oh, to heck with it. And we started going down. Didn't have any other good news to speak of either. The Open Market Committee minutes from the Federal Reserve's last meeting, last month, pretty much confirmed the stories that we'd been getting out of it, that there were 3 or 4 of the Fed governors that were not only in favor of, but actually adamantly in favor of a rate increase, which means the next time Kevin Warsh has a meeting next month, he's going to have another Donnybrook in terms of an argument with his fellow Fed governors, which means there's not going to be peace in the valley on that side of the Potomac either, is there?
No, there won't be, and rightly so. We continue to move in the direction we're moving. We've got to get this inflation and these prices under control, and we've yet to do that. And a lot of it's wage inflation, which, we have now gone through that for the most part. All the way, wage inflation should be, at least under control and shouldn't be continuing to rise. But we're still feeling the effects of it.
I was going to say the personal income numbers we get month by month are fairly well under control. I mean, we're gaining our earning power, but we aren't it isn't inflationary levels increases of personal income. More than anything else right now, we're simply looking at way too much spending. The government is taking too much of the debt. It's a lot of this we can blame straight on the government.
Yeah, yeah, overspending, right?
Yep, yep. We spend too much. We eat up all the debt market, and that ends up driving up the value. It drives up the value of the bonds. I'm looking at my chart here. I don't see the 30-year on the chart that I follow. I know you do that more, but the 10-year bond, which is kind of the overall reference, after that announcement yesterday, the yield on a 10-year bond actually went up instead of down. And this is kind of, to draw the analogy, the government buying its own securities back. And that sounds good because it's actually kind of sort of like retiring debt. But you're going to analogize it to a company buying its own stock, which they get hammered with doing a lot. It should raise the price on the bond, and that bond then would have a lower yield. But all that happened was the bond market basically said, well, okay, fine, but you're not buying more than you're actually borrowing, so the net effect is we're still going to bid those rates up. And the bond market is a bellwether that can scare the pants off the equity markets, can't it?
It definitely can. Yeah, yeah. It's up to 4.7% right now in the 10-year. The 30-year is down off of its high yesterday by a little bit because it had gotten up to 5.3. It's down to 5.26, if that makes you feel any better.
Oh, goody. I'm just thrilled. Talking about the tidbits we got out there this morning, there really isn't a whole heck of a lot of good news in that, other than perhaps maybe one international tidbit. The United Arab Emirates is finally hacked off enough of it, Iran. They've cut economic ties with Iran, which means there's going to be one more tiger in the jungle trying to get oil out of there around Iran, and that might help a little bit on the price of oil, although I'm not sure how much.
Yeah, it would be nice if it did.
It certainly would.
Hey, my headline, you're talking about the debt increasing to 40 trillion. And I didn't really, I mean, you don't think about this part of it, but that means it has more than doubled in the last 10 years.
Crapola.
Yeah.
It's been a vertical slide up basically ever since the beginning of the Great Society, with a slight pause when we had the tech boom back in the 90s that ended up giving us a couple of years of no growth in the debt. It's been almost a vertical line all the way up. Talk about all the good news that we had yesterday. Turned around, Moderna doubled in value off of the announcement of that new cancer drug. They're now falling down again. You were telling me that some of the big companies that we count on for stable values, like AutoZone, they're falling like a rock this morning. Nothing really has good news to report, does it?
They don't. And let's start with one that we all have been into and have purchased stuff from, and that's Walmart.
Yes.
Walmart for the second quarter, they beat on revenue. Here's the deal for them, though, because they're getting beat up this morning. They missed on same-store sales for the second quarter by almost 1%. They were expected to be at like 3.5 increase, and it only went up 2.6. So that wasn't good news for them. They also, their earnings per share guidance for the fiscal third quarter that we're in right now and their full year guidance fell short of what everybody expected. So you put all that together, and we've got Walmart trending down about 7.2% this morning.
Crud. Yeah, you talk about a 0.5% miss here, a 0.5% there. If it was a company like yours or ours here, it probably wouldn't be all that big a number. But when you talk about Walmart numbers, you're talking about billions of dollars worth of difference, aren't you?
Yeah, you really are. You mentioned Advanced Auto Parts. They came in. They had mixed results for a second quarter. They posted revenue about $1 billion, about $1 billion short of expectations. So that wasn't good news. Same store sales were off. They actually lost 0.5% per store versus they expected each store to go up by 1.4%. So it was just, just not doing well. They're actually down 22.6% this morning.
Good Lord. These numbers are starting to sound like a major sell-off.
It is. And then let's go to, was it Cody, Cody, however you say that, the beauty supply company. Their quarterly loss was larger than expected. And so that has them selling off this morning. They're down 17.6%.
Good Lord, if you can't sell inexpensive makeup, you know you're in trouble, right?
It's just been a rough go.
Oh, good Lord in heaven. Well, when we get to the futures, it'll all probably total up into something resembling crummy news overall, but we always get a little bit of in-depth information each morning, too, at this time. I do my taxes every year, and they talk for all this time about Social Security being tax-free income, which, yeah, in theory it is, unless you're dumb like me and you work and draw Social Security. That involves some planning that we need to talk to people like you about. Got any tips today?
It does. So let's just kind of lay that out, because a lot of people assume that Social Security is going to be tax free. And for some people, Dave, it is, but it really does depend upon your other income, because up to 85% of that Social Security benefit can become taxable. And there's things that push that, right? And one of the big things that push you over that limit is IRA withdrawals. Think about it. If we put out an example here of Barbara, she's 72, collecting Social Security, and she pulls some money from her traditional IRA whenever she needs a little extra. So what she didn't realize, every time she takes that IRA withdrawal, it raises her income. That drags more and more of her Social Security into being taxed. So that $10,000 of IRA withdrawals ends up costing her significantly more in taxable income, and causes a lot more of her Social Security to be taxable. That's why I want folks to look at Roth IRAs, Roth conversions, seeing if it makes sense for folks. And it's one of the things that we really put into our planning process to help people reduce that overall tax in retirement, Dave.
Understood. Plan ahead. I was telling you before we went on the air, I always get surprised every year by the percentage of my Social Security that's taxable, even when I do try to plan ahead and guess at what percentage it will be. Let's set the table after a good day yesterday. We kind of have given them a hint that not really any great number of flowers growing in the garden this morning. 45 minutes before we start, where are we?
Right now, the Dow is down almost 0.75%. The S&P 500 is down about 0.4. The NASDAQ 100 is down almost 0.6, and the Russell 2000 is down 0.7. So everything is solid red this morning. On the other side, we've got silver making a huge jump this morning, up another 1.3% this morning, while gold is trending down. It had a great day yesterday. I think it was up over 3% yesterday at the close. But they're trending down about 1/3% right now. Crude oil, Dave, the Emirates isn't helping us. We're up
No.
2.9% to $86.86 a barrel right now.
Poop.
Yeah.
I don't have a lot of good news elsewhere either, looking across the pond. The Asian rim markets, on the other hand, were fairly well up at the close this morning at 6 a.m. Mainland Chinese markets up by about 1/3%. On the other hand, Europe is looking at our futures and going, ruh-roh, the average European index, almost everybody is in the red ink. I think Italy is the only one that's not in red ink, and they're flat, basically. Average European index down by about 0.4% halfway through their trading day as well. So our mainland partners over in Europe are no happier than we are, which kind of means if you're gauging your retirement decisions based on a portfolio with a lot of equities in it, you're saying, uh-oh, how do I get a hold of you to straighten out my risk balance in here, Philip?
You're right, Dave. I hate for anybody to head into retirement without a plan in place, knowing exactly where their money's coming from on a monthly basis. That's why I developed the core retirement design. I'd love to spend 30 minutes with folks, making sure that they are on the right path to that retirement they always dreamed of. Give us a call at 388. I'll get my number right here in a minute, 382-0037. And then catch the Statler Financial Radio Show every weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning. A lot of good information there on planning processes. Check it out on Highlands. I'm out of shape, Dave. News Talk 7:30 a.m. at 95.3 FM.
All right. We'll both have our tongues untangled by tomorrow morning at this time on Light. Have a good day, my friend. Thank you.
All right. Take care.
Take care. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Again, I want to thank you for joining us today. I look forward to speaking to you again tomorrow. Take care. Until then, bye now.